Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Ty Coates. Today we have a very special guest joining us, and that is the one and only Tone Vays. How's it going?
I'm good. I'm good. I have your live stream open. Want to make sure the streaming. Yeah, perfect. We're good. Hey, glad to be back on your show, man. How you been?
I've been well, and I think this is the first time having you on my show. Well, we did have you on for the podcast party, the release of the book, which wasn't a real show. We didn't do any analysis there. We were just kind of drinking, having fun. So I was kind of considering this your first appearance, since we'll actually get to pull up some
Oh,
charts.
good book.
And you got it right there. That's really cool to see.
Got it right there.
I've been really enjoying seeing that on various people's bookshelves and whatnot. And actually, Leah and I have a speaking gig this week. Here on Thursday, we're going to be speaking to a class of graduate students at the Singapore University, and we'll be doing that
Oh,
virtually.
wow.
So that's really exciting. And glad to hear that you got your copy. Have you been able to had any time to crack open the cover?
Yeah, that's about as far as I got, unfortunately. I'll get to it though. I promise. I have not been able to take the time off, especially in these markets, to read it. I'm waiting for the weather to be nice and warm, so I can just chill outside. Finally, can't really go more than 3 feet from my apartment, and I'm gonna try to knock this bad boy out. Maybe go to my cabin in the woods and take a week off and finish reading it.
Well, I can't wait to hear what you think once you get the chance. Reminds me of a funny joke that my friend just told me. He said, not even a government-imposed quarantine has got me to read your book. Well, fair enough.
Yeah, I know. It's like it's like no one in my family has ever watched a single one of my YouTube videos. Like at any point, like not a single member of my family. Like a few friends have seen some episodes, but like not a single member that's related to me has ever watched a single episode on my YouTube, and I have over 1,000 videos.
Isn't that crazy? That's wild. That's too funny. So, all right, we will have a lot to talk about today. I don't want to waste too much time, but we'll start out by just taking a look at Tone's site. This is tonevays.com, TONEVAYS.com, and this is definitely a site that I have spent a lot of time on myself. A lot of good content here, both free and paid, and something that I definitely have come to more times than I can count is here under this education learn trading section. This is where I learned the TD sequential. Before taking Tone's class, I was resources in here, sharpened up my knowledge on candlesticks, learned what Tone's favorite candles are. I found that definitely helpful, and have definitely used the candlestick cheat sheet until I knew those like the back of my hand. And then down here, chart patterns, extremely important to me. Another good cheat sheet available. It gets into momentum oscillators, and then here under number 5, advanced charting techniques. Number 6 is the time analysis, and this is where there's some really good links to stuff that will give you what you need to know the TD sequential, and this is basically how I learned it myself. This is a really good site that is out there available for free, and there's a couple charts that exactly everything that you need to know to calculate the TD sequential yourself. So great resource here available from.
My favorite is the Bloomberg Market Essentials on net. It's a little lower, yeah. Bloomberg Market. That's my favorite.
I'm not sure if I don't think I've seen this one, so I'm glad that you pointed that out. I'll have to come give that a look.
It's really basic. It's probably the first one people should click on.
Okay, so that is Bloomberg Market Essentials, and then the kind of textbook on TD sequential, as far as I understand, is written by Jason Pearl. This goes very, very in depth about the indicator, and that's another really good resource. So that is all available here on Tone's site for free, and then he also has some paid products and services. Has a webinar coming up this weekend that I'm actually really excited to attend myself. One of the The two things that Tone is known for, at least for me, is the TD sequential and options. And options is something that I have really been wanting to learn and have really been struggling to get a really good comprehensive understanding by just looking at YouTube videos and doing my own research. So this is exactly what I need. It's 3 days, all day. That'll be a lot of information, and I cannot wait to attend this and walk away understanding what I need to know to trade some options. So I'm really looking forward to that and take a look at what it's about and sign up.
Oh wait, that's the general webinar one. You have to click on the description in there.
Okay, so click on the details.
This gives you the details of the options one.
Great. And it is $3,000. May look like an expensive price tag, but as far as I'm concerned, I have no doubt that the value provided in the webinar will be well worth that. And that type of price tag for learning this type of information is very reasonable from what whatnot. Then also conferences. I'm sure most people have heard about the Financial Summit, which we will be doing again in Bali. Absolutely cannot wait. It was an incredible time last year. Everybody that attended really had a great time. So we'll definitely be looking forward to that. And then was that Unconfiscatable as well. So a lot of great stuff that Tone has been doing for the space.
And the Hyperwave webinars are actually available for sale through my website, right on-demand videos. And Tyler Jenks's webinars are there as well.
Excellent. I appreciate you pointing that out. I was meaning to touch on that myself. And yeah, about half of those webinars I was participated in myself. The Hyperwave webinars I was in there, Selgin, not in Consensio, and then the Constructing the Perfect Portfolio. That's the best, my favorite one. Really, really important one there. And then Understanding Retirement Accounts.
My favorite was the retirement one, and I released it for free, so I really should remove it from the website. Like, I don't want someone paying for it, because it is available for free on Tyler's channel.
Beautiful. Beautiful. So thank you again, Tone, for everything that you do. And then, of course, Tone has his own YouTube channel, which I'm sure everybody is familiar with. If you're on his site, you can see latest podcasts and then a list of the different shows that he does. So thank you again, Tone, for joining. It's been quite the pleasure getting to know you over the recent year or so, and really appreciate you having me too, and then today being on the show. So we will
yeah, for sure, man, for sure. Oh, no, real quick, you want to make me an admin in your YouTube chat?
Yes, I will do that right now. Cool.
All right.
All right, and so I will go ahead and get right in. I'll just kind of provide a brief synopsis of what I've been doing, what I've been seeing, and then we will...
Wait, so before you go on, so I see the chart full screen in the YouTube, but it's a little small.
Yeah, that's a funky thing with my OBS. It only streams a small part of my screen. So.
Oh, okay, got it. So this is on purpose. Okay, no, that's fine. I can deal with it. It's not a problem.
Great, appreciate it. So yeah, this is something that we can just take a quick look at what I've been doing throughout this action. It's been awful choppy, awful messy. We've been getting some moving averages that hasn't led to any follow through, which is not the ideal setup. It's actually the opposite of the ideal setup for a system that I trade, which is based on moving average crossovers. So really good time to go through how I've been managing this situation. And the last time I was on Tone's show, I mentioned having some orders up in here to around the moving average and slightly above. This was when I was on Tone's show somewhere in here where I thought that I missed out because it got close to where my orders were and then it moved down. It didn't have follow through there, and then it came back up, and here is where I did get filled on my shorts. And for that, I had a stop loss of a moving average crossover. So right here, moving averages crossed over, told me to get out of my shorts that were entered right here. My entry was around 7,100 and the exit signal came up around 2. So instead of exiting immediately, I set a hard stop loss above local highs and set a order to exit at break. So here the exit signal came. If we moved up, I would have exited right away then and there. If we moved down, I was going to get out at break even, and that is what happened. And I was ready to immediately re-enter. After getting out at break even, what I was watching was this close below the 200 EMA. A pullback and into a golden cross should really refuse to close below the 200 EMA. It maybe if it peaks below and wick below, it close back above, that looks good. But when you close below on a pullback and into a golden cross, it's the first sign that the crossover may just be a peek through, sort of a stutter step. And then that's especially the case when you turn it into resistance. So we closed below the 200 EMA and then turn it into resistance. So this was where I was finger on the trigger, ready to short the next crossover. That came in right here, and I publicly shared that I was entering short there and adding orders to sell on a throwback to retest prior horizontal support for resistance. So that worked out really well. Initially, I got filled on that move up. Price again moved in my favor, but no follow through. And it does this double bottom right here where it sweeps the lows, takes out stops, and then wicks back above, and then comes and takes out the local highs. And now we're back above the 200 EMA, and I'm in danger of getting stopped out again. All that would need to happen is a moving average crossover. That is what happened. And in this situation, I did end up exiting right at the top, and that is just what will happen sometimes. This was a different setup than over here. Over here, it was really, I felt very comfortable giving it some room to come back down. This was much different. I was looking at a sort of cup and handle type of pattern that you could maybe say inverse head and shoulders, but this was really bullish to me, this sort of W cupping action that came up and now is right back to test horizontal resistance after failing to break down horizontal support. So this candle right here is where it caused the moving average crossover, and that was where I went ahead and exited. I saw definitely some room to the upside based on a measured move from this breakout, and I didn't want to be hanging around in that position at all. So did end up taking a little loss there. Quite all right, choppy market, and taking a small loss there is just not going to be an issue at all. Now we're back in the spot where the pullback into a golden cross closed below the 200, and now it's staying below, and now a death cross is coming back in. Its potential, if we maintain below 7,000 for another day, then that death cross is going to happen, and I'm going to enter my short again. Last thing I want to show before turning it over to Tone is a potential little bearish channel that is developing. So let's take a look at that. Okay. Parallel channel. So what we're looking at now is some lower highs and lower lows, enough to go ahead and start drawing in a channel. And I like how this channel turns out because the median is also been an important level, and that's what I look for when I draw a parallel channel, is that the median is also being respected with the top boundaries. That tells me that the trend lines are drawn how I want them. So here we do see that this first little pullback, it was the median that found support. When it broke that down, came down to test the bottom on the bounce up here, resisted the median. Once it got through, came up to the top. Now we're back at the median. So if we do fail to get back above this horizontal level of resistance at 7,000, then it will lead to a death cross with the moving averages, and I would expect that to result in price revisiting the bottom of this channel. And it is so, it's such a flat angle, it's not going very steep at all, and that means that the horizontals are going to line up very nicely as well. So right here we see this channel, and then horizontal resistance here at 69.50, and then horizontal support support down here around 65, which is in line with the bottom of this channel. So that is where I'm expecting the next move for Bitcoin is to come down here and retest this area for support. What are you seeing, Tone?
I'm with you on the fact that Bitcoin is more likely to make a little bit of a dip, even though I was very encouraged by the fact that while the S&P 500 had a huge crash today, Bitcoin actually went up. So this could be the start of that decoupling in correlation that I've been talking about for the last few weeks. That was I have basically I haven't paid too much attention to Bitcoin. For me, the bigger level time frames, the weekly, the daily, have just been completely neutral, telling me to stay out of this asset. And since I don't really trade on a, I like to trade more as a swing trader. So if the daily and the weekly are not giving me anything, I kind of don't really pay attention. And right now, it looks like you are on the weekly. Yes, you're on the weekly, and if you throw sequential on, but before you throw sequential on, you should update. I updated the sequential, and I can see that yours isn't the latest version. So if you want to close the sequential and just open it up from scratch, it will be the latest version.
There we go.
All right, and then you'll have to drop those things by, yeah. Well, those things get dropped in general settings, the zeros and stuff. So you want to go to general settings? Nope, not there. Yeah, general settings. And you want to go to, I think, appearance. Scroll down. It's kind of small. No, not appearance. Sorry, status line. Status line. And get rid of indicator values. So you want to scroll down. Values, yeah. That takes that. All right. So when we look at this, and as we're looking at it, it's been, ever since the bullish one price flip, it's been 3 weeks in a row of telling you not to trade because we have not had a green 2 above a green 1 or a green 3 above a green 2. And by the time that green 1 came around, I mean, if you were short as of a red 2 going below a red 1, there's really no reason to be sitting still in that short after it rebounds from 3,800 all the way to 7,000. I mean, at some point, going up that way, your stop loss needs to get hit. So ever since that stop loss got hit, even on a real trade or mental trade, for the last 5 weeks, the weekly scale has been totally neutral and telling you not to enter any trades, and it's been completely correct because Bitcoin hasn't really trended anywhere in the last 3 to 4 weeks. It's been slightly bullish, but not that much. And we can shoot over to the daily scale.
Before we do that, just a couple lines to draw on this chart. We can see that these weekly wicks and closes have been respecting the same levels pretty darn commonly. Here we have the wick. The wick close was very near there. Close was right on it, open, and then now we're back testing it. So right now, and this was basically the conclusion that I came to in the last show, was that basically no man's land is in between 6,400 and about to the top of this candle here around 73.
I would lower that a little bit. I would lower that bottom line to the top of that big green candle. Yeah, maybe, a little lower maybe, just to make sure you're right there. So that would be my no man's land. And
okay, so that would be for tone 6,700 to 74, and I should have mentioned the reason looking at 64 was not because of this chart. It was due to the quarterly close that we recently had. The recent quarterly close was let's see, what was that? Close 64.25. So for me, that's the key level on the downside. If price can support that quarterly close, then I see it having plenty of room left to the upside. I would be expecting bullish continuation. If it does break down that 64, that's where things start to get a little scary. Okay, and Go figure. It looks like my Safari is frozen here. Let's see. Looks like Chrome is still working, so let me try to move over to that setup. Otherwise, I might have to have you take over the screen share. 1 second. And I was wanting to go to daily, but yeah, it's frozen up.
That sucks.
Yeah, I'll tell you what. I've just been having nothing but problems. Literally, it's a brand new computer. Just bought it. Okay, let's see here. So I'm trying to log in over on Chrome. Just give me 1 moment, everyone. Thank you very much. Now the challenge will be if I can remember my password while I... Oh, something got me. I've just been having troubles. I think it's everybody.
Same problem. One Bitcoin is too expensive, so you go and buy a shitcoin, but you don't have to buy a full Bitcoin. You can buy a fraction of it. So there's really no right answer here. And because there's no right answer, and because there is infinite amount of between assets and trading styles and trading instruments to execute on the same asset, when people say, well, if everyone followed this guy X, everyone would make the same decision, and that's insane, right? Like there's an infinite number of permutations of things out there to trade, and no matter what the trade is, there's always someone that thinks it's going to go in the opposite direction, always, and that someone also has a big following.
Yep, a bunch of really good points. That's exactly what I've thought about, and completely agree that there's no one right answer. It's what works best for you, and what you just touched on is what's been and go ahead.
And it might take you a long time to figure out what's best for you. The most important part is while you're discovering what's best for you is to understand money management. Because if you don't have good money management skills, you will never get the chance to find out which combination of assets, instrument actually works for you.
Yep, I completely agree. And that is for people out there wanting to learn how to trade, what you need to do is figure out a system that you're going to use, and then you need to figure out a market that you're going to trade, or multiple markets, and then you need to figure out the time frame. So once you have those figured out, it just takes volume and effort, and putting in the volume, basically getting in the number of trades that you need to gain the experience that is required to succeed long term. And the only way you will do that without getting completely wrecked is by properly managing risk. So yeah, that's something that I've been thinking a lot about, and I guess this is a good segue to move on after taking a look at this weekly channel.
I don't know if you want to throw in the daily chart.
Yep.
Yeah, the weekly channel. Hold on, let me just see that. The weekly channel doesn't look very good. Let's hope we get to the top of that channel. I haven't really put this channel on, but the top of your channel isn't really, it only has 1 point of contact, which bothers me a little bit.
Yes, I completely agree. And that was adjusted. Initially, I was drawing it like this, and I was viewing it as broken up in here. And then after it came back to the bottom, that's when, for me, the channel is back intact. If it tries to break through the top and then instead comes back to the bottom, it tells me to go ahead and look at adjusting, specifically if the bottom acts as support. And the reason why I like this, putting it from you connecting these lows with a parallel line to this top and only having this one touch point, I love it because of the median. And look how important the median has been all the way throughout once we make that adjustment. And here we are back at the median showing signs of resistance. And again, this is another reason why this has been my critical level kind of. If this resists this median, my target is the bottom. And if it gets through the median, then the target is the top. That's why this level is so important for me, and why there's probably so much contention in this range.
So let me throw an argument as to why the old channel could still be the right way to look at it. Because now, with the benefit of hindsight, we pretty much know that that run up in early 20. Is that a run up in early 2020?
Yep.
Oh, this is the channel from. Oh, it's the early 2020 run-up. Okay, I'm sorry. I thought this was the 2019 run-up. Never mind. No, because I was going to say, I thought that run-up was the 2019 run-up above the channel, not the 2020 run-up.
Okay.
In which case, I would have said that's due to that Ponzi scheme out of China, and that overthrow above the channel could be ignored because we know it was caused by an artificial move and not a more natural one. But in this case, there really wasn't any kind of Ponzi's that moved Bitcoin up in February. So yeah, maybe the other way is good. I haven't really been looking at channels in that area. I really need multiple points of contact. But look, people can get to the same conclusion by using different methods of TA.
Absolutely. I completely agree that it could be a valid interpretation. Even we could argue that this move right here was just a trap, that there was maybe a lot of liquidity to be found by pushing the price through that boundary, and when there's no follow through, it's just a trap and doesn't justify the whole thing being adjusted, and it still is intact this way, and now we are testing the top of it instead of the median of the way that I'm drawing it. So yeah, I could see either one. I definitely, when I'm seeing these parallel lines act as key levels, I think that there's got to be a channel there somewhere, and I would be more than happy drawing it either way. So yeah, let's go ahead and move on.
Let's daily real quick, and we'll keep it short, and then we'll move on to other stuff.
Yeah, that daily 9 definitely.
The daily has just been kind of the daily's been kind of all over the place, and yeah, see the new indicator is much better for dark backgrounds.
Okay, great.
It's the same chart, I'm assuming, yeah. And the daily has kind of been all over the place, not only with sequential, but also just stuck in a range. So what I did today is I did my best to fit a new ascending triangle onto it, but that ascending triangle, I pushed it as much as I could to fit it into the current system. It literally means it needs to break out like in 3 days.
Yep, I can definitely see that. Myself, more kind of thinking that that this was the ascending triangle and this was the fake breakout. Right. So yeah, I am. That would be interesting if it can. That could put that back intact. Yeah, I could see that. Looks like we did get. Is this 2 falling below a 1 yet, or is that equal? Low 6
not yet, but
yep, not yet.
Yeah, like today's candle just like not moving at all, and that's great because the S&P 500 fell hard.
Yes, sure enough. All right, so yeah, let's get into some traditional stuff. What we've seen out of gold and and Bitcoin over the last 24-48 hours may be that first sign of decoupling. So that is really could be a big sign, something to pay close attention to. Pretty basic stuff for me here that I will outline and then send it over to Tone. This was an area where I have been looking to enter short positions. Go ahead and get filled on the first sort of set of orders. This has been my sell zone between this correction here from 2870-ish up to 3121. Did enter short the S&P right before the candle closed last week. Was just the idea that a weekend could lead to a gap down. Looks like that did work out pretty nicely so far anyways. So this
you're still fully not short?
Yes, still fully in it, and I'm targeting new lows. Have big plans.
How did you enter that short? Because I entered it by buying put options, but you're not an options trader. So how did you take the short trade?
Yeah, so that is something that I trade on leverage in crypto and in traditional markets, and I do not think it's the best way to do it, and that is so interested in learning options. So yeah, definitely in the future, I do think that.
So you did it. Sorry, you did it like with crypto within the crypto space as a CFD.
No, I did it with a CFD, but not necessarily in the crypto space. So yeah, just like more like a forex type of contract, SPX
Oh, okay,
500.
but you did it in with fiat, not with crypto.
Correct. Yep. Correct.
Okay, so you're like with the CFD broker that does these things.
Yep. And I used I think about 7.5x leverage, if I'm remembering properly. I can pull that up here real quickly. Was looking at this horizontal as my stop loss. If price did get back above 31.50, I did not want to be short at all. So that gave a risk of about 10%. So I scaled down the leverage that I use a little bit from there just to be safe. So I went with about 7.5x leverage, short on that position, and do plan on holding that for a while. So yeah, that is the area that I'm looking at, and then quickly we'll show the rising wedge that just confirmed. It's more apparent on the 4-hour, but you can definitely see it here. So we have confirmation of this rising wedge that a target of, let's see here, right around 24.25, and that will be the first target where I would look to trim, and then I am targeting new lows.
Let me ask you a question, because like I don't do wedges. I mean, you know that. How do you? Is there? Does a wedge provide a target, like as a pattern?
Yes. So it's first where you first start the wedge. It's the low of this move and then the high of this move when it first starts.
Okay, so the range of those 4 candles.
Yes, exactly right. Yep.
Okay.
And I do like wedges a lot myself. Like for me, this is even better than a like a bull flag. It's just kind of an exhausted trend that gets up higher than a flag, and it just really is something that I really look for in entering into counter trend corrections, is falling wedges in bull markets, rising wedges in bear markets. So yep, that is what I'm looking at. What are you seeing, Tone? It sounded like you went short on Friday as well.
I did. That's because when you throw on show, you'll know exactly why.
On the daily?
Yep.
Cool.
Oh wait, it's still the wrong sequential. You gotta grab the new one. I guess you're on a different chart.
I guess so. All right. TI. Okay. Oh, look at that. That is beautiful.
Yeah, and you'll have to get rid of those zeros by going back into the settings, the channel settings. And scroll down. Oh, you're in the right space. No, your status line. Just scroll down and indicator values.
There you go. Cool. All right.
So the reason why I took the short was because of the daily 9. The first 9 off of this rebound.
I didn't see that myself. That is nice. Yeah, that's real nice. Does the 9 become a better sell, being that it gapped up from the 8?
No, it doesn't. But when I took the trade with 2 hours to go in the market, and with 2 hours to go in the market, that 9 was a doji candle, like the perfect doji candle. And it spent the majority of that day as a doji candle. So I was under the assumption that we're going to have a doji candle at market close. That big run-up that you see in that candle, making it a bullish candle, literally took place in the last hour of trading, if you go to the 10-minute chart. And my position ended up deeply in the red because I was pretty damn leveraged in the option space. But when I took the trade, it was a beautiful doji candle. In addition, I know you're a big fan of exponential moving averages, and I'm a big fan of simple moving averages, and there's really no right answer here. But if you put the 50 period simple moving average instead of exponential, that at the time that I took that trade, off of the 50 simple, it was also an absolute perfect rejection of the daily high in that candle with 2 hours left in the trading day. So I had a basically a trifecta of reasons to short that market. The sequential 9, the rejection of the 50 simple moving average, and the doji candle. Now, yeah, right there. Now, at the time that I took the trade with 2 hours left, the body of that candle was a doji below that line, and the top, the day's high, was perfectly smack in that line. So I had the rejection of 50, the 9, and the doji. Now, in the last hour of trading, we kind of broke the top of that 50 period. We were no longer a doji, but I still trusted the 9. And since this wasn't a day trade, this was a trade I was willing to hold for a week or two, I did not feel a reason to exit a trade 2 hours after entering it. So I held it through the weekend, and it's paying off right now.
Beautiful. Way to go. That's awesome. And that is why I took it myself was we had a death cross with price overextended. So I looked to sell the first correction that retests that area. A aggressive zone to enter would be between the 50 and the 200. For me, I prefer to enter between the 200 and a little bit above. That gives me a lot more flexibility in the event that I do get stopped out in a market that moves against me. I can a little bit more flexible to get out at break even if I'm selling this moving average and above it. And as with tone, I had some confluence with various indicators because we had the moving average in line with this horizontal zone that I had lined out. So a pullback and up and into the moving averages was a throwback to retest prior horizontal support for resistance. It was a test of the 50 moving average, which is angled down, and it was potentially a test. I had orders set layered from here all the way up to here, and didn't end up getting these 2/3 up here filled. So I will talk about what I did instead there. And so yeah, confluence of moving averages, horizontals, and a pattern, the rising wedge, telling me that this is a time to start building short exposure. And the key above and beyond all of that is the risk reward. From here, I'm viewing a good risk reward. I can take my stab. If we get above 31.50, I want out. I don't want to be in this. That's a 10% risk. If we don't take that out, there's a lot of room to the downside based on the current environment that we're in. So another.
Oh, hey, so
yep.
Just want to. Sorry. Finish your thought. That you were done with the analysis.
I'm done with the analysis. Was just ready to take a look at Tesla, which
okay,
we were both.
Before you do that, right? So here, if you because you said you missed the 9 on that candle.
Yep.
If the sequential is giving you too much information, if you put it back on, if you want to really clean it up, just go to the settings of the sequential, and go to inputs, scroll down, and like put check marks on the bottom 4, like even the risk line and the countdown and the intersection and the countdown, countdown. And now it becomes very, very clean, and there it is. And it literally only shows you the 9s, the 13s, and the current candles set up now.
Beautiful. I'll have to keep that on.
There's also an option. There's also an option to, if you don't care about the 13s, there's also an option to eliminate all 13s. Like they don't even show up even if they have an arrow. So if you go back to settings and scroll down, and instead of sequential, choose none in the dropdown. And then it's not going to show you any 13s at all, even when they're 13s.
Beautiful. That's excellent, and yeah, that's I don't often just have the TD on my chart because there's so much going on that I'll just pull it up when I think we might be close to the 9. Having something like this
but
makes
when it's like this, it's completely non-disruptive.
Yeah, totally. This is beautiful. I really like it. And again, shout out to Tone's indicator. Definitely the best TD sequential available. My favorite part is that T does not need a color flip to reset the count, and that is very important. Probably right here is an example where multiple 9s in a row are very important, even if you don't reset the count. Okay, so another one that I was just listening to your show from yesterday. It sounds like we both kind of came to had similar ideas that low prices for oil and potential recessionary economy would be bad for luxury goods, and it'd be bad for electric cars. And Tesla is
leave
kind of
the
both.
sequential on. Leave the sequential on. It's not going to be in your way.
Perfect.
Yeah.
There we go. Yeah, just do that by habit. Look at this. I mean, that is perfect at the bottom. Top 9s. That is beautiful. Absolutely beautiful. Looks like this was a 9 up here too.
Yep.
Okay, so yeah, that was the idea, and shout out to a listener who actually was the one that just ran that by me, got me thinking about that. Fabric King sent me a message asking if Tesla was a good short, and I took a look, gave it some thought, and entered a position. And what I was looking at here was basically a correction that went big. This is a bear market. We've got lower lows, lower highs, and we've got a big correction in a bear market. So it's a overbought correction in a bear market is my opinion. And it's testing a key area of resistance from this trend line. And similar to the S&P, we've got horizontals that can be drawn in. So there is our horizontal zone. And so up here is going to be my stop loss, this horizontal here, and the trend line was where I was entering, and so that was a position where I felt was very good risk reward. I posted a chart on Twitter, said I'm shorting 750. Stop loss was this high here above 800. We've got a lot of room to the downside. If the S&P really is entering a big prolonged bear market, then we should expect stocks to have a big correction for multi-year correction. And this is a stock that was had more gains in the last couple of years than probably anything else. Maybe this or Apple are the two that were the most overrun in the bull phase, and therefore they've got the most room to the downside in a bear phase. So a lot of things kind of lining up for me fundamentally that suggest Tesla could be a good short to hold on to for a while. And then technically the setup was in agreement, and that's what I look for, is technicals to line up with fundamentals. A bullish chart and Bitcoin leading into the halving. That's a slam dunk for me. Bearish technicals, when it looks like the S&P is entering a long bear market, it makes sense that when those two line up to go ahead and take a position when the risk reward is in our favor. So this is one that I entered, and I do plan on hold on for a while. It sounds like your trade was shorter term, kind of more of a scalp. Tell us about that.
It's painful for me to talk about my Tesla trade. So my Tesla trade, when you come to my options course this weekend, remind me at some point during that class to talk about the mistakes I made with the Tesla trade. I made money. But even today, I got out of Tesla at about $715. And then an hour later, it dropped all the way to 675. So I got out a little too early. And I did not. So with options in this volatile market, I don't have the luxury of giving myself that big of stop losses. So my stop loss would basically be a new swing high. So, I mean, you don't really have much wiggle room at all. And my options were expiring this Friday, and I'm looking at a huge loss. If the market would reverse, if Tesla would have reversed when I got out at 715, if it would have reversed to say 730, and I held those options into tomorrow, I'm looking at a significant loss. So I had to get out of Tesla today no matter what. I just have to pick the best point to do it. I got out a little bit early. I am certainly bearish Tesla, but in this environment, the option trading is not ideal for an asset like Tesla. There's always spreads I could come up with to kind of cushion that, but that requires time and a lot of homework, which at the moment I'm spending that time putting together the options workshop. But I am bearish on Tesla. My short trade on Tesla did not last very long. It's almost like a scalp, and at the moment, it feels like I'm trading options as a day trader, which is the worst way to trade options. But the current market environment is almost forcing options traders like myself to be day traders because of the large volatility swings and the large implied volatility on those options, which I'm going to teach this weekend. So normally I would never ever treat options this way, but the current market environment is kind of forcing me to do it. So I'm almost gambling with leverage that's higher than Bitmex's 100x in the option space. And that's why the margin for error is so small. And on a stock like Tesla that can move, 100% in a matter of weeks, the traditional and the volumes that take place is just, it's very, very difficult. And I make the long story short, I am not actually short Tesla anymore, but I'm very bearish on the stock at the moment. And only based on TA. I love Tesla as a company. I think they'll be the biggest market cap company in the world. I still believe that. But at the moment, .9 and that big red candle today, not to mention the entire market, is bad. But if Tesla can make it back to that $400 area going into earnings, I'm going to be very interested in buying some long-dated calls. But the implied volatility on those calls is going to be high. So I better come up with another strategy to utilize and try to go long somehow.
Excellent. And you bring up a great topic that is very, very important for people that are kind of new to trading. What Tone just said was he wanted me to remind him to bring up the mistakes that he made in his Tesla trade at the options webinar. So he made mistakes in the trade and he made money. That is what separates profitable traders from losing traders, is the ability to be wrong or make mistakes and still make money. Most people on Twitter, most people who are losing traders have it the other way around, where they can be right and still lose money. They think the market's going up, so they buy, and then they get stopped out before the market actually does go up, and they lose money before the market did exactly what they thought. And that's what happens with mediocre to bad traders, is they'll often be right and lose money, whereas really good traders can be wrong or make mistakes and still make money. All the difference in the world. So very interesting stuff. And so the thing that I've been trying to figure out about oil is something you brought up earlier. You mentioned how no matter what you do, what side of the trade you're on, there's always somebody else on the other side of the trade, and that's what made me wonder, what in the heck, how was this possible, what we saw out of oil? Weren't there anybody covering short positions? Shouldn't there have been tremendous demand from short sellers as price was falling? What happened here? What's your thoughts, Tone?
Yes, I actually did a video specifically about that. So here's what happened. The way futures work, well, we're going to talk about specifically the way oil futures work, is Monday, yesterday, was the last day to trade the May contract. The reason why it's called the May contract is because oil gets physically delivered in May. So for those that are purchasing oil futures, will be taking delivery of that oil between May 1st and May 31st. I believe the seller of the oil, the one that is short the contract, gets to dictate the terms of when and where to deliver that oil. And but there are like certain places that or physical exchange of oil takes place. And those that are actually short the oil, those are the ones that are going to be delivering the oil. The problem happened here is because the economy is shut down, all the people that were long oil contracts that weren't actually interested in taking delivery of barrels of oil needed to sell those contracts. But there wasn't anyone wanting to buy them because no one needs oil delivery in May.
Ah, interesting.
So the speculators that were long oil without the ability to take possession had to sell it at any price because, like, paying someone $40 a barrel to take it off your hands is probably cheaper than getting paid $40 and trying to take delivery of oil you don't know what to do with.
Huh. Interesting.
But because it would cost you more. Like, for example, if all of a sudden a barrel of oil ended up in front of your door, do you think it would cost you more than $40 to deal with it?
That's very interesting. Yeah, yeah. Wow. Okay, so now answer me this: how do you even enter an order in a broker to buy oil at negative $40? Like, how is that even possible to have a negative price?
So, as a retail investor, you would not have been able to. So, probably about a week ago, you would have been notified by your broker, hey, dude, unless you prove to us you have the ability to deliver this oil, to take delivery of this oil, or unless you can prove to us that, like, you can trade these oil contracts all you want, but when it comes to the last week before it gets cut off, and whoever is holding those contracts either has to deliver the oil or receive the oil. That's why, with a week to go, anyone that isn't an oil institution, like anyone that isn't an oil refinery or an oil, rig, gets rid of these contracts. And you roll into a contract that expires a month later, and you speculate on that. So the only if you have a good exchange, that exchange will actually liquidate your contracts like a week before, unless you have special arrangements with that broker that you're capable of delivering or taking delivery. So the retail investor could not have traded that future contract at all that Monday. That's just a retail investor. Now, there's also CFDs and then the ETFs. Some of the ETFs could have gotten in trouble on this one. But the USO ETF rolls out of this contract 2 weeks before it expires, even though they're going to be restructuring it because of this, even their contracts got into a little bit of trouble. So basically, the only people that were trading this stuff, people that have accounts with non-responsible exchanges, or people that have permissions and some kind of clearance that they can receive barrel, and or they could deliver barrels of oil. But just because you have the ability to receive barrels of oil or deliver barrels of oil doesn't mean that you can, right? So you could be, an oil refinery that happens to be hedging something else with no intention of actually taking delivery because your storage is already full, traded till the last minute. So these were the people that probably got caught with their pants down in the last minute, and some people made a bunch of money and some people lost a bunch of money, but there's definitely a cluster F somewhere with a shipping tanker of oil with a lot of confusion. That's what the hell's going on.
That's for darn sure. That's really, really good. I appreciate that.
Right, but the point is there's usually an efficient market going into the final minute of a contract's expiration date. Because if the price drops low enough, somebody says, I'll take that oil. And if a price goes high enough, someone says, I got extra oil, I'll deliver it to you. But in a world of a global shutdown, and most places saw oil at like 15-year low and realized it was going to go to negative, right? So there was just nobody left that could take it. Like for example, you're in Colorado. If all of a sudden there was a day where weed happened to be on a 60% discount, and you filled up your entire house with it, if it goes any cheaper, you're no longer, it doesn't matter, right? Like you have no more room.
Yep, you're the bag holder. Yeah, that's a really good explanation. I really appreciate that. That helps me to understand how in the world somebody oil at negative $40 a barrel and why somebody would be selling it at that. So yeah, I appreciate that. That's really interesting. So what's your thought? What's the next move from here?
Well, if the economy doesn't get reopened anytime soon, I can see this happening on the June delivery contract, but not on the last day, like next week, right? Because if nobody wants delivery in June, someone's going to have to pay someone to take that oil off their hands.
Wow. Yeah. If anybody out there has a way to store some oil, let me know. It sounds like a fortune to be made.
I hear Trump wanted to, find a way to make some room and just buy more oil at these ridiculous prices, and the Democrats are blocking him from, because someone wrote a funny tweet saying, yeah, the Democrats want to support the U.S. Oil rigs, so they'd rather pay $100 for a barrel of oil to a U.S. company than get paid $40 a barrel from like Russia.
Wow. That's wild. That's too much. So yeah, I think that there's got to be some companies out there who are going to be in dire straits as a result of not only the economy shutting down, but the prices of oil. So definitely could be some shorting opportunities out there. I'm going to be keeping my eye on Chevron as one of them. If it takes out this local low here, we've got what looks like maybe a lower high, sort of double top type of situation. If we take out this local low here, that looks like it could be a good time to enter. If it happened today, it'd be a 2 below a 1. So it's definitely something that I'm going to be paying close attention to. And then we'll also be keeping an eye on trend line up here, as well as some moving averages. If it does get through this area at 87, there's a gap that it could fill above, and then it would run into some horizontal and trend resistance. So a really good short would be up here at 93. An okay one would be if it broke down here for me. And yep, I'll be continuing to keep my eye on companies that may be in a vulnerable situation due to what we just saw out of oil. And
so here's the interesting part. So before you go to gold, so I'm on the other side of this. See, I'm looking for unreasonably depressed oil sector companies to try and go long. So for example, I recently did a bullish trade on Apache, ticker 8. That was my only oil exposure. Okay. And if you pull up APA,
oh, that's beautiful. Look at that double bottom. I like that.
And
actually.
that is that's the 4-hour chart. If you go to like the daily, you are on a very short-term scale. So if you go to the daily, and I'm just waiting for the TI to pull up. Actually, no, go to the weekly, because I got into this trade off the weekly 9 a few weeks ago.
Look at that, right at the bottom.
Yeah. So that weekly 9 in the beginning of this month got me very interested in this stock, because look how much it fell. If you just zoom out a little bit, look how a little further. So, I mean, this was a $50 stock not that long ago. And this is a pretty big company. So this wasn't a very long trade. I already got out of it only because, like, I see the economy still shut down. But that 9, after that giant capitulation, the way I was looking at it, I picked this thing out at like $4 or something. And I did it with options as well. And I'd be willing to go in again once the oil situation resolves, because these are kind of companies that are primed to be potentially put out, I mean, something like Chevron or ExxonMobil.
Interesting, and definitely appreciate your perspective. I'll just input kind of my thinking is that yes, Chevron did make a move down as oil has been selling off. It did make a big move down, but it didn't make a move down in the last day or two. Like since oil had that bit to negative 40, this hasn't done much at all, and that's where I'm thinking that this is not having the reaction that I would expect due to the newfound low oil prices, and therefore if this had a big move down with oil yesterday, okay, I'd forget about it, but now since it didn't, I think that, so I'm like looking for laggards, companies that are exposed to oil that didn't really move when oil did. That's something I'll be continuing to keep my eye on, because I do think that the economy, people are going to not be driving as much, they're not traveling as much, so they're not going to be buying as much oil, and then if they have to decrease the price of the oil that they're selling and they're not selling as much, be a bad situation that could potentially lead to some sort of buyout after a big move down, it would be my opinion.
So I'm not all that familiar with, I'm not crazy familiar with, so I'm not exactly sure the details of Chevron's corporation. I'm not sure if they're actually digging the oil, right? So I'm not sure what they do, because there are refineries. Apache is an oil exploration company as its primary business. So I don't know, I have to look into their fundamentals or their company, I guess, what they actually do in the oil industry, because if they're not directly responsible for getting oil out of the ground, and they're just a refiner of that oil, then I would have to think about a little more. What does the low oil price mean? Because if they're just taking this black goo and turning it into gasoline, then that's a slightly different business model. And if they can get cheap oil, and when everyone starts driving again, that could be actually pretty good for their company.
Interesting. Yeah, it'll be interesting to see how the actual gas prices reflect. We haven't seen gas prices really change after this recent action in oil, so that'll be interesting. We are over an hour here, so we will be wrapping it up. Just we'll take a quick look at gold, and want to cover what I've been seeing here real quickly. Seeing an inverse head and shoulders that is giving us a target that is very near the prior all-time highs, and that is what I'm targeting at this point. So here we have our horizontal resistance. That's our neckline. Here's our shoulder, head, shoulder, and we broke through here. Here was the confirmation. And here is a throwback to retest prior horizontal resistance for support. So that's why I did enter, because we did come back down to retest prior horizontal resistance for support, and we got some nice action around there. Let's see. So yeah, this was where I was entering, seeing, I didn't have the 9 on my chart, but what I was seeing was this kind of rounding action. This is what I look for. Real nice how you come down, you peak below that prior horizontal resistance, and then you fail to really spend much time there, close back above, and then start to get higher lows in the candles, start to kind of turn the corner, and then on this candle there, that's where like final confirmation, getting a reversal candle and then a close above. So that was really looking good. Last step was kind of through a little trend line here. It did end up finding some resistance on this bounce, came back down to retest, and now this is exactly what I like to see. This is what Forex traders will refer to as turtle soup, if I'm understanding that pattern correctly. It is where you get this bottom, you come down, you sweep the lows with a wick below that takes out wipes out the stops, and then the demand holds strong and you get a sharp reaction back to the upside. So really like this action that we're seeing right here, the strong reaction. If it stayed down here, that would be bad, but just having one wick below and then quickly getting back above, that's looking really good. So now I am expecting this thing to continue to the upside and reach the target from the inverse head and shoulders, which I will recalculate here really quickly. That is about a $220 move. So that gives us a target of $1,900 is the target from the inverse head and shoulders. So that's what I'm looking at for gold. What are you seeing, Tone?
You gotta go to the daily chart for me, and on that daily chart, you'll see that 9 right at the top.
Nailed it. Yep. With
yep.
Beautiful
Now
reversal.
I was not in the gold trade when I realized there was a 9 at the bottom. That turned in by the time I realized it. Nope, too far.
Oh, is this? It was a 9, and then.
Yeah, that was a 9. By the time that candle ended, it was already a 1. By the time I realized it, it was already midway through the next candle, and that's when I say I will admit I missed the trade. So I was not in the gold trade, but that 9 gave me the confidence that this was most likely going to be a 1 to 4 candle correction off the 9, and now we're going higher after the 1 to 4 candles at the top. No, there you go.
Up here?
Yeah, off the 9, the 1 to 4 candle correction. And this morning, when that candle was sitting at the lows, I thought that, hey, this correction might lead to a 9 to the downside, but look, closed as a beautiful hammer candle. So if tomorrow we go above the top of that candle, I am now a bull in gold. And that could potentially give me an entry as we break the top of that candle on tomorrow's candle in gold.
Beautiful. And that looks like that's around $1,700. So yeah, that's definitely a key area to keep an eye on. And yeah, another great call by the TD sequential, working very, very well.
Can you go up silver for a second as well?
You got it.
So the reason why I wasn't very upset with the gold trade is because when that gold hit a 9, I was already in the silver trade. And if you look at the TD sequential on silver,
just nailed the bottom to the top, like the exact bottom.
I got in. Right. I got in at the 9 at the bottom. And
beautiful trade. That is absolutely beautiful. What was that? A nice little 36% move in about a month. That is beautiful.
For full disclosure, I will admit I did not profit that entire time. So I overhead. I can talk about that during the options workshop as well. So I bought calls, but I also sold calls against it because I didn't think silver would rally that much. So once silver started to go up, like above $14, I was no longer making money, but I hung in there just to see that 9. So I only made money from my entry up to 14, and then I was capped on my gains. I was no longer profitable beyond that because of my hedge that to lower my risk in case I was wrong.
Yeah, and definitely way to go. That's a beautiful trade, and definitely a number of things sort of lining up here at this local top. You had prior horizontal support, broke down here, gets retested for resistance, beautifully resists that. At the same time, you've got a rising wedge forming, and as the rising wedges come to an apex, it's really a good sign of upcoming volatility because it's got to do something. And I trade wedges both ways. If they break to the upside, it's a buy signal. If they break to the downside, it's a sell signal. So here you had a rejection from prior trend support, and you had confirmation from a rising wedge. So now the wedge target would be about $1 move from here, so about $14.50. Looks like it already got there very quickly, got to that target. So yeah, it will be interesting to see what happens with the precious metals. I'm really impressed. Look at two trend support lines that came together right there. That's beautiful. I'm really interested to see what happens.
That was like the local top, and right now it's a little bit tricky because while gold had a 4-candle correction, this went into the 5th candle of a correction. So I'm a little bit torn here. Should I wait for another 9 buying opportunity, or should I jump on the long now? So what I might do is, if gold is popping tomorrow, I will take the bullish in gold. But as a backup play, I will wait for silver to maybe give me a 9 buy. So maybe gold and silver will decouple a little bit. Gold will go up very slowly. Silver will go up even slower, or maybe pull back a little bit more, because silver rose way more than gold did, and silver was clearly the leader. Silver got to a 9 first on both at the bottom and at the top, and now silver is a little further along, but gold is definitely the better safe haven right now. Silver is more speculative, gold is a little more safe haven, which is why the gold candle today was way more of a hammer candle than the silver candle, which is a very interesting relationship. If you take a close look at that, at the silver candle that we had versus the gold candle that we had on the daily, the candle that just completed, because the new future, the new day started trading a few hours ago. So that red candle on silver is a bearish candle, but that same candle on gold is a bullish candle. So I find this very, very interesting, and silver has been going down a little bit longer than gold off that 9.
Yeah, I'm very, very interested in what we're seeing out of gold. It has looked very, very strong amidst everything else. It's been the strongest that I have seen, and it is much different. It is, in my mind, it is completely decoupled from silver already. These charts are, for me, entirely decoupled, and we're going to take a look at why. So what we're seeing out of gold is it's up here testing the levels from near the highs, up around February 2013. Here was the top. Here was the correction.
Beautiful 9s up there too.
Absolutely beautiful, killing it. 9 down here. So here in gold, we're up here testing these levels. Highs were not anywhere near 2017's lows, and since 2017, actually since 2016, we have been putting in higher lows on gold, and we have continued that. This action right here failed to break down the local low. The wick is higher and the close is higher than the local low. So gold is on higher lows and higher highs and is testing levels that are very near prior all-time highs, the levels from, let's say, September 2011. Now let's take a look at silver and its structure.
Oh, silver is screwed.
It's just screwed. I mean, it's done. So for me, yeah, I guess I'll real quickly just walk through. So much different chart. For me, this is entirely decoupled. Gold is up here, testing 2011 highs. Silver is down here. Not gold is creating higher highs and higher lows since 2016. Not put in a higher high since 2011, and it just created a new lower low. So not only did it not create a higher low on this move, it created a lower low. Not only did it create a lower low, it created a lower low below the lows of 2014, 2015, 2016 that was that horizontal support. That's as decoupled as it's going to get, basically, for me. One's in a bear market, full bear, and the other's in a full bull, and that's been the case for 3 years now. Gold's been putting in higher highs and higher lows. Silver's been putting in lower lows and lower highs. So I'm really interested by the trade of longing gold and shorting silver as a hedge. That the hedge may end up making you money. If silver's in a bear trend, gold's in a bull trend. And if I long gold and short silver, I'm betting with both trends and I'm hedging myself. So that's a setup that I'm definitely interested in. And I will draw a quick channel and then call it a day. Okay. So looking at...
I also want to mention real quick, because now that people are learning what these future contracts actually have a delivery, mechanism at the end if you get stuck holding the contract or owe the contract. As far as like going into the future, if you are looking at gold or silver as a safe haven and you are interested in taking delivery, one gold futures contract is only 33 ounces of silver. Like I can hold 33 ounces of silver in my hand, like easily. It's like a 1 kilo bar. 1 kilo bar is, I think, 32 point something troy ounces of silver. So it's like 1 kilogram of gold. One futures contract on silver is 1,000 ounces, not 33 ounces, 1,000.
Interesting.
I don't think people realize how heavy that is and how much space that actually takes up. So silver is incredibly more challenging to deal with than gold.
Very interesting. Yeah, I appreciate your input there. So yeah, I'm gonna stop screen share unless you have anything to add here.
No, other than over the next 20 years, the gold-silver ratio will continue to expand. The only way I see silver hitting $50 is if we're actually in an high inflationary environment. But I can see gold going to new all-time high next week due to being a safe haven. So I think the decoupling will continue to the point where silver's only real value is a little bit of jewelry and as an industrial metal. So whatever additional value silver has over copper as an industrial metal, plus the jewelry aspect, that would be the value of silver. My best guess, I don't know, $5, maybe lower. And gold will actually take silver's monetary premium to make it go even higher.
100% agree. Silver is being demonetized. It lost its value as money when paper currency was invented. This was something that Saifedean covered very well in the Bitcoin standard, and I completely agree with both of you that silver's price right now is due to it having monetary value, and as time goes on, that is losing its monetary value and going into gold. So I do agree that silver, I think less than 5, maybe even closer to 1. I don't really know, but I think much lower prices are warranted for silver, and that lost value should either go into gold or potentially Bitcoin. Probably not really, because people that are into silver are more into gold than Bitcoin, but potentially Bitcoin could get a 10th of that market, of that monetary value, and it should get more. All right, so thank you everybody for tuning in. I appreciate Tone sharing the Hyperwave book. Really cool to see he's got it there with him in his cave. He's up to 30 days in isolation. He did stream this morning on his channel. He's been doing a bunch of shows lately, so go on over and make sure to subscribe to his YouTube channel. Click the bell so that you're notified when he goes live. You'll definitely be wanting to pay attention to his analysis, not only in crypto but also in the traditional markets. And then also go on over to his website if you're interested in the options webinar, which I'm extremely interested in myself. Cannot wait. Go on over, check that out, and if you sign up, you'll see me there this weekend for a long few days of education, which will be really valuable stuff. So thanks again for coming on, Tone. Thanks for everything that you do, and I'm sure we'll be talking soon.
Yeah, for sure, man. Hey, thanks for having me on the show. It's been great. I got to do this like maybe once a month, and hopefully I'll see you soon, man. This thing is gonna have to end.
Yeah, absolutely. I couldn't agree more. And we'll
run out of meat.
Uh-oh. That's not good. Hey, I got myself a haircut today. You guys might have noticed ears got lowered. I was out there on the black market getting a trim, making sure that we didn't get caught. So I'm feeling good, starting to get back out. And so yeah, I'm excited for this thing to all be over. Once that happens, we need a party. Maybe make a trip to Vegas.
Oh yeah, no, actually I am thinking of heading out to California as well. Yeah, Vegas sounds like a good plan.
Ooh, I've got family in California. It'd be easy to talk me into going out there. So yeah, thanks again. Thank you all for tuning in, everyone. And I will plan on coming back this Sunday. Me and Daisy will be doing a show, and we'll look forward to seeing you then.